Sanjiv Bhasin in the discussion. Good morning, Sanjiv. I was thinking about you, Sanjiv, today morning when Anisha was speaking about Jeffries hosting GMR Airport Management in New York for a conference and targets arriving for 100 rupees a share. You've been talking about it from a very low level. What else? Before we talk about stocks, why don't you give us your view on the market right now? It has risen 10% from the panic lows. Index level, almost 20% small caps have risen. Is it time to book out and sit on the side a bit?
Yeah, good morning, Ajay. So, despair and euphoria ride hand in hand. If you are prudent, then you should take some chips off the block. But there is a saying: you can't leave the market, you can't time the market, neither can you sell and then buy. If you did that to any of the capital good or to a NBCC or a GMR at 35-40 when it was reeling under debt and other things, then you never saw 90. So staying invested, mix your stocks, put your brand of stocks. We still think some of the PSUs, particularly oil and gas, defense, are doing good. Banks is somewhere you should take some chips off. But IT, I mean, yesterday itself, Ajay, the whole fall in Dow over 420 was arrested by Microsoft, by Apple. Apple rose 7.5% to all-time highs. It's at $3.2 trillion. I think IT, we are missing the woods for the trees. Select stocks are going to outperform, and I think the leadership this time comes from IT. So IT is something I would be very bullish. I also like the PSU pack, that is particularly HPCL and IRCTC. One of my dark horses from 650 is just starting a show. The railways minister is back. You are seeing the holidays and the railways trains go book. 75-80% EBITDA on train booking, 35% on NEER, and 16% on catering. I think this stock is headed to 1500. So select stocks, index maybe range bound till you get the Fed move and beyond. But I'm not looking for too much of upside on the index. I would be rather hedged against the index against my stocks.
Okay, that's interesting. HPCL and IRCTC are the only two stocks, though, that we got from you. You're saying IT. So which names within IT, Sanjiv?
So, good morning, Avan. It would be HCL Tech, Wipro, and Emphasis. We participated in this sell-off in Emphasis because of Blackstone reducing its stake. We think Emphasis is one of the best poised companies in IT. By the way, a month back, when I was in Alibag and I was talking to you about what I had bought, I had recommended Coforge when it went to 44, 45, 4600, just because of they're raising their QIP. The stock is given 1,000 rupees or maybe 28% from there, along with dividend. I think that's the case with Emphasis. The pessimism and the block deal has made a little bit of overhang of stock, but the underlying theme remains very, very bullish. So HCL Tech, Wipro, and Emphasis are three stocks we are actually investing in.
What are your thoughts, Sanjeev, on the industrial pack? Increasingly, from 100% consensus on a buy, every now and then I'm getting a sense that some people are not hesitating in trimming their exposure from completely overowned, expensive industrials. Any thoughts there?
Correct, Ajay, but we have kept L&T as our big play. We have booked profits in ABB, Siemens, Cummins, and we've been overweight on Hindustan Construction, a small mid-cap stock which was reeling under debt, and the Lavasa. The Lavasa was spinned off into a 6,500 SPV. By the way, the cohort of Lavasa is actually Sharad Pawar, who has his money, which anyway, we will not get into that. But 38% of all construction work activity in nuclear power, hydrothermal goes to HCC. They are arguably the largest contractor, one of the largest in the country. And I think Mr. Gulab Chandani has done an extremely good job of the execution and the proceeds. So if you left out which they have made a SPV for, I think this stock is available at pennies. And this stock has the potential to double from here. So as a disclosure, this has been in our portfolio from 24, 28, 32. We still think this has got a lot of place. So in construction activity, infrastructure, we are overweight. On some of those high price Siemens and ABB, we are trimming exposure. We think they are fully priced. And it's more to do with the new fund launches, which are actually exacerbating their valuations. L&T and HCC remain our top picks over there.
Point. Yes, SCC was a very, around 10, 11, under 15 when you started talking about it, and now clearly big views coming in. Lara initiated a note yesterday as well. I want to talk to you about IndusInd as well. Today, notes seem to be suggesting levels of 2,000 rupees, but the stock somehow doesn't cross the 1400, 1500 band IndusInd has got stuck into. Brokerages are saying that 18-20% kind of a loan growth is not ruled out, best placed, and even talks about 16% kind of deposit. So if everything is fine, why is the stock got stuck in a kind of a range? Sanjeev?
My other pick, Ashok Leland hit all-time highs. And I'm proud of the fact that 70, 90, 100, even at 170, I told you this is my top pick. Ashok Leland will go to 300 rupees, mark my words. But now the parent IndusInd, which is arguably the largest loan, advancer on vehicles, and this is the best period for them. Their book has been good. Mr. Katpalia has transformed the bank, and I think that this is definitely one of the poised banks. As a disclosure, this is also in our portfolio along with Ashok Leland, and we think that IndusInd is rightly placed for at least a 20% upside.
Okay, that's interesting, looking at some of those private sector names. What about the metal space? Is that something that you're consciously avoiding, or there's select opportunity here as well? And if so, where?
So, Avan, we've stuck with Tata Steel and SAIL and Nalco on the, aluminium and bauxite side. We think Nalco is very well poised to be above 225, 250, given that their 8,000 crore capex in bauxite and alumina has just played out. Iron ore is doing very well. So Nalco seems a very, very good play here. Tata Steel has powered its way, and now with, the talk of Chorus and autos being well. See, Chorus is sells specialized steel, which is 3 times the price of normal, but goes into the auto sector. And that auto sector is doing exceedingly well. So I still think Tata Steel is headed to 200 plus. And SAIL, I think the export content of SAIL has been the biggest positive for it, for the stock to be re-rated. We still think SAIL is the new GAIL.
All right, those are some select recommendations within the metals basket. Meantime, Naresh, just a quick word coming in on some of the big losers yesterday with top deliveries, some names like an IRB Infra or a PNC Infra, TCNS Clothing. What are the charts looking like?
So IRB Infra saw a block deal, and that is where the stock did a gap down. But the stock on a longer term charts is interesting. The stock went through a 10-year, more than a 10-year consolidation from 2010 to 2023. When it broke out, the stock has given a big breakout about 30-35 mark. Did the pause around 70-75 for the last 6 months. So the trend is up at 60-65 is a good entry point. So this looks interesting. Same is the case with the PNC Infra. The stock recently broke out above 460 odd levels, and it's come to a retest, which looks like a good entry point. So all the infra names have a very strong base across the board, but then they've gone through consolidations and a breakout. So it's still like IRB Infra and PNC Infra.
If you like this video, then like, share and subscribe to ET Now.